Ladies and gentlemen, welcome back to the channel. AMC stock has been green 2 days in a row. Let's hope that does continue this week. Now, in the next video, we will be going over a price prediction for this week and any and all important earnings and or economic data as well. Now, here in this video, we're going to focus on what's currently going on with AMC. We're going to look at the technicals, look at all of the data, and how this week is setting up in that regard. So, hit that like button and subscribe to the channel. Let me know what you think about this information down below in the comment section. So first things first, I want to say this before we even put out the next video. AMC stock can continue to bounce. The RSI hit a record low. So a record low RSI could mean a decent bounce could be coming. Now, you never know whether or not we are going to get more dilution, and that's going to be a big risk factor in this upcoming week, and really every week, every day, going ahead into the future. Now, AMC stock has bounced from $4.01 to currently trading at $4.51 per share, which is about a 10% move just in the last 2 days or so. From the ultimate bottom, from that 401 level, I believe that is a bounce closer to about 15% or so. So it's looking good so far. The RSI is still oversold at 29.23. So definitely some more room to see a larger bounce here from my perspective. Now let's get into some of the data here with the Ortex platform. And keep in mind, these numbers are I would say vague at best, roughly inaccurate estimate. Okay, I think the short interest is far higher than what these numbers say it is. And I do think a certain aspect of this short interest actually rising recently from 7% to almost 10% now could be due to some of those short positions that are starting to get exposed, if you will. Now, we went over this rule change back in November. There's a new rule change that should be already in effect, that we should start to get publications of short interest on certain stocks. Now, we're not going to get all the details, but we are going to get details like duration, how long a firm has been short in AMC, what kind of collateral is being used, and other different information in that regard. Who is doing the lending of AMC stock? All kinds of different things. Certain details we will not get, but a majority of them, well, we will get. And I think that is starting to cause more institutions to not take on short positions, but some of those short positions not being 100% accounted for in terms of hiding the short interest is starting to eke through to represent a larger short interest percentage of free float. So you do have an estimated short interest at 9.6%. $106.59 million worth of short positions currently on AMC stock. Days to cover 1.26, 24.06 million shares that are currently sold short. Shares out on loan 20.32 million. Cost to borrow 1.09%. Utilization of 34.23% and a short score of 56.62 out of 100. Now, here is that. Something else that we want to be watching for is, as I've said before, the EPS estimates for growth for the S&P 500 is around 11% for 2024. If that number comes in lower than that, we're going to have a problem. Even if you meet the expectation of 11%, given the S&P 500 hit a new all-time high on Friday, it's probably not going to be enough. Markets probably want to see 13, 14, 15% EPS growth for the S&P 500 to justify where valuations are currently at. So I think that is a risk factor that you need to keep in the back of your minds for this week as well as for next week. The following week after that, because that's when you're going to get all of your big tech names. You're also going to have the Fed coming here on January 31st, and that's also going to be important. Now, currently, markets are no longer pricing in the first rate cut in March. So believe it or not, stocks did well on Friday, and we did not, see pricing of Fed policy going along with that. So what essentially happened is we're we're pricing in less rate cuts, but the markets are still managing to do very well. So that is great. That means potentially not as hawkish of a Fed Jerome Powell, potentially. We'll have to wait and see. Obviously, Powell can still be hawkish if he wants to be, but it just means maybe the markets are better prepared for it. Now, on Friday, the big reason why stocks did so well, AMC even seeing a bounce, you did get Michigan consumer sentiment. That came out at 78.8. Last month's rating was 69.7 and the estimate was 70. So this came in much higher than expected. 5-year inflation expectations fell to 2.8% from 2.9%. Michigan consumer expectations went from 67 to 75.9, much better than expected, much better. Michigan current conditions also beat big time, came in at 83.3, estimate was 73, and 1-year inflation expectations dropped to 2.9% from 3.1%. So across the board, consumers feeling better about the economy, apparently, and inflation expectations also falling. So across the board, that was fantastic news on Friday. Maybe we continue to see a continuation rally in our markets. Now, something we definitely want to be watching pretty closely, though, is the 10 and 2-year yield curve. Now, this has always predicted recessions since 1950. Now, the best way to understand this, it sounds confusing because the bond market, just trying to read the bond market, is very complicated, right? Because it's inversed. So it's kind of like a dividend stock. If you buy a 5% yielding dividend stock and it's $100 per share, then that yields you 5%. Say the dividend never moves for a period of time and it's still $5. But let's say people want to buy that stock and it goes to 200. Then your dividend yield is 2.5%. Well, same is true with the bonds. So the 10 and the 2-year yield curve should never be inverted. You know this. Now, it's been inverted for a while, since June of 2022. If the yield curve is any prediction, the upcoming recession is going to be pretty brutal. Now, you usually don't go into the recession as the yield curve is inverted because capital appreciation can happen on long duration bonds. So imagine it like this, right? If the yield comes down, then you're going to be seeing bond prices going up. So in a perfect world, you should have bonds that yield you more for a longer duration of time. So in theory, when the yield curve actually uninverts, that's when people are actually going out and hedging, most of the time going out and buying the longer duration. And I know it sounds confusing, but when hedge funds buy the longer duration, and now those start to go up and 10-year yields start to fall, at the same time 2-year yields start to fall and people start to buy 2-year yields as well. That is what you call a bear steepening, and that is potentially what we're starting to look at as of right now. 2-year treasury yields at 4.38%, 10-year treasury yields at 4.13%. So if you start to see 2-year yields dropping faster than 10-year yields, that is going to be a problematic situation. Now, either way, when you go from uninverted or from inverted to uninverted, that's when you actually tend to be going into a recession. And you're only inverted 24 basis points now. At the low, you were inverted about 1.06%. So you've rapidly started to uninvert here in the last month or so. If you do see an uninversion, that's something to watch for in the week ahead as we get earnings and more economic data. And that is something that will start to very much have an impact on our markets. And it's because bond investors are they have a lot of information, right? If you are someone that is keen in the economy and you see what's going on, well, you're going to tip off a billionaire or multiple billionaires, people like a Warren Buffett. What are they going to do? They're going to go out and hedge their portfolio. They're going to go out and start buying, long duration bonds to get that capital appreciation. And that's where you get the uninversion of the curve. It's not just one day, people wake up and the yield curve goes inverted. No, there's a process of money moving around that is causing that. So long story short, definitely something to be watching for over the next couple of weeks, because if you do uninvert in the next couple of weeks, that's going to mean likely more downside for our markets, and or a recession is getting pretty close. Now, Atlanta GDP estimates, Atlanta Fed GDP Now tracker has 2.4% GDP for the estimate. This is actually up from 2.2% before we got the last, I believe it was, retail sales number. So we are expecting some pretty good GDP numbers as well. Anything that kind of pushes back on that is something to be watching for. Now, Stocko tracker data, you did have a lot of activity last week, like hundreds of thousands of calls, about 110,000 puts or so that did expire here for last week, some of which are going to get exercised, a lot of which are probably going to get rolled over to the next week's expiration. So for this week, you do have about 22,000 calls currently in the money, about 38,000 calls out the money, 14,000 puts in the money, and 18,000 puts that are out of the money. So decent amount of option activity here. If the option chain does start to, actually populate and we start to get more or larger numbers here, that's definitely something to be watching for, and that could cause even more volatility in AMC. Now, the percentage of stocks above their 50-day moving average, it's been falling a lot recently. So as the markets are hitting all-time highs, the markets are actually very much top heavy. So the Magnificent Seven carrying the markets higher, whereas your average stock's been falling. Like I said, percent of stocks above 50-day moving average was up about 5% on Friday to about 62% overall. So that is not the greatest sign, believe it or not, and definitely something we want to watch for going ahead. So there is that. If we take a look at the stock twits, you can see people are extremely bullish right now. 91 for the sentiment. Message volume, though, is extremely low. It is a weekend. It is a Sunday. It's at 10. So not not too uncommon, but a lot of people are definitely on the bullish side right now. Participation ratio is on the low side, sitting at about 42. So there you have that. We went through the Stocko tracker data, the Ortex data, all of your important information. And again, AMC stock likely continues to bounce. We are going to, go over specifically catalyst that will be coming out over the next week or so. But from here, from my perspective, looks pretty good as of right now. Hit the like button as well as subscribe to the channel. Thank you for watching. Enjoy the rest of your day, and I will see you in the next one.